Hello everyone, this is Dr. Sonam Arora, Assistant Professor, LJ Integrated MBA. Welcome you all to the next video session of Subject Banking and Insurance, Semester 9, Finance Specialization. Today, we are going to discuss about the regulator of insurance sector, that is IRDA, Insurance Regulatory and Development Authority, which established in year 2000. Now, when we talk about the background of the particular institution, in India, government has started exercising control on insurance business by passing two acts in year 1912. The first one is Provident Insurance Society Act and the second one is Indian Life Insurance Company Act. Now these two acts are the very important which work as a historical milestone for the nationalization of insurance business in India. These acts were later comprehensively amended and a new act, namely Insurance Act 1938, came into existence for controlling investment of fund, expenditure and management of insurance company in India. LIC was passed in June 1956. The LIC absorbed 154 Indian and 16 Indian insurer, 75 Provident Society and Club 1 organization. The LIC had a monopoly until the late 90s before the introduction of LPG in India, when the insurance industry was reopened to private sector. Now, General Insurance Act was passed in April 1973. So, after the freedom, we nationalized two major institutions of insurance sector, that is LIC in 1956 and General Insurance in 1973. 107 insurers were amalgamated and grouped into four companies which hold the business of general insurance in our country. These companies are National Insurance Company, New India Assurance Company, Oriental Insurance Company and United India Insurance Company. If I talk about the oldest company of general insurance business still existed in India, that is Oriental Insurance Company. In 1993, R.N. Malhotra Committee was set up by the government. The report was submitted after a year and the recommendation of R.N. Malhotra Committee was very important. One of the main recommendation was that private sector be permitted into the entrance of the insurance industry. Foreign company should enter by floating Indian company, preferably as a joint venture with any Indian partner. Following the recommendation of Malhotra Committee, in 1999, the Insurance Regulatory and Development Authority, IRDA, was constituted to regulate and develop the insurance industry in India. Now, look at the main recommendations of Malhotra Committee. The first recommendation is government should take the holding of GIC and its subsidiary. The second recommendation is private company with a minimum paid up capital of rupees 1 billion should be allowed to enter in the industry. The company should deal in either life insurance or general life insurance business, but a company cannot deal with both business simultaneously. The third one is foreign companies may be allowed to enter in the industry in collaboration with a domestic company. The fourth important one is the Insurance Act should be changed and an insurance regulatory body should be set up, and an insurance company must be encouraged to set up the unit linked pension plan. So here I included the major recommendation. I prefer you go to the Malhotra Committee and read it in detail. Now look at the Insurance Regulatory and Development Authority of India. It is a national agency run by the Government of India. It is based in Hyderabad and formed by an Act of Indian Parliament called as IRDA Act of 1999, which is amended in year 2000. IRDA has framed regulation ranging from company registration to the protection of the policyholder interest. Now, when we talk about the mission of IRDA, it is to protect the interest of policyholder, to regulate and promote the orderly growth of the insurance industry, and the matter connected therewith or incidental to the insurance business. Now, when we talk about the Section 14 of IRDA Act, there are certain duties and function of IRDA. The first one is a issue to applicant a certificate of registration, renew, modify and withdraw of the any such registration. The second one, which is protection of the interest of the policyholder in matter concerning assigning of the policy, nomination of the policyholder, insurable interest, settlement of insurance claim, surrender value. These all come under the criteria of IRDA. The third one is also work to provide the practical training to the intermediaries and its agent. It also specify the form and manner in which book of accounts shall be maintained. Further, it also regulate the investment of funds by insurance company and management of margin of solvency. Now these are the some important one which are mentioned here. I prefer that you go through the duties of IRDA in detail. Now look at the composition of the authority. The authority shall consist of 10 members. One is the chairperson of the IRDA and the 5 are the whole time member, that is a maximum limit, and 4 part time member. So collectively the maximum limit of the composition is 10. These members are appointed by the central government who are the person of ability, integrity and having the knowledge of a business of life insurance and general insurance as well as the economics, accounting and administrative. The opinion of central government is the highest and the useful authority is always be there as in the composition of the board. Thank you. We will meet and soon in our next slide.